The news broke a couple weeks ago about the 3-to-1 stock split happening for SCHD, which means that once again, this already highly popular ETF, which is the Dividend King, considered the Dividend King of all ETFs, is back in the spotlight as a highlighted favorite of the investing community. And that is not a bad thing.
Boy, here we go.
A 3-to-1 stock split means that you host a party, okay, a pizza party with your kids, but you only ordered one, okay, you only ordered one party tray style pizza. And as the party goes on, you look around the room at all of the kids who are jumping off of your favorite lounge chair, and you start to think to yourself that you might not have enough pizza slices for these kids who are building up a little ravenous appetite. So you get an idea. You go in there and you start cutting up that party tray into smaller pieces of pizza. And once you're done, you look at it. And now it looks like there's a ton of slices to pass out. Now, did the amount of pizza you have change? Absolutely not. Still one pizza. But now it looks like there's a lot more in there when those kids come over and they open up that box, right? And it's the same way with a stock split in the market. When it comes to a stock like SCHD especially, the value of the stock that you own does not change. But what has changed is the perception of the stock's cost. It goes without saying that a lower stock price is obviously more attractive to buyers in the market, which is what companies want, because the more attractive SCHD is perceived to be by you and I, the buyers, the more willing we are to spend our money buying shares in it. Also, SCHD is a Charles Schwab owned ETF. Why does that matter? It matters because although there are numerous brokerage platforms out there that you can trade on, Charles Schwab is one of the most popular brokerages in the country and is one of the brokerages that does not allow you to buy and trade partial shares, which means that when you trade on their platform, you have to trade full shares. And at a cost of $85 a share, that means that for a lot of smaller investors, this is going to price them right out of trading this particular asset, right? And Charles Schwab doesn't want that. They want to entice as many investors as possible, new and old, to trade with SCHD. Now, I have seen people actually bash this ETF. I have seen other channels tell you about how much they'd rather choose another stock that they believe can and will perform better. And for those people, I say, great. You do what works best for you in your portfolio. And while I do believe that changing strategies for a portfolio may be necessary at some point in our investing journey, I also believe in the saying that if it ain't broke, why would you try and fix it? Now, SCHD is the second largest stock in my dividend-only portfolio, and I am up almost 12% with almost $900 invested, and which comes out to about 10.5 shares on the books. The last dividend I received was $7.71, and today I have made the decision to invest daily into SCHD. That number will fluctuate depending on the day, depending on the week. But earlier today, I just invested $20. Tomorrow, it might be $5. The next day, it might be $10. The key here isn't about the amount. It's about the consistency and how I believe this stock will perform over the course of the next 10 to 20 years, which means that the stocks that are within this ETF must perform well in the future. So, for clarity, what are those stocks? Let's get right into it. Y'all know where I'm going, stockanalysis.com, one of my favorite free tools that I use to analyze stocks a little bit more closely. Now, right here, I have their holdings pulled up, and we're just going to go through a couple of these to give you an idea of what is inside of SCHD. Now, there are 103 holdings at the time of this particular recording, okay? 103 holdings. And in here are some of the most popular stocks that our economy and that our country has to offer. Starting at number 1, the most weighted, okay? The most weighted means this is the heaviest amount of shares that are in this portfolio. The highest weighted one is HD, ticker symbol HD, the Home Depot. Honestly, if you think about it, who is surpassing Home Depot when it comes to home improvement? Nobody. I used to work for Home Depot for 10 years. I know exactly what their competition looks like. Lowe's is not even close. They're not close. They're not close. I worked at Home Depot in management for 10 years. I have a very, very, very healthy understanding of their business and how they conduct it and what their goal is and how they stay ahead of the competition. The Home Depot is not going anywhere. They will be number 1 in home improvement probably for this foreseeable future. They're like McDonald's in their sector. Okay? Home Depot, number 1. Verizon Communications, BlackRock, right? Some of you all might not know about Bristol Myers, but I encourage you to look them up as well. Chevron Corporation, we all know what that is. That's gas and oil. Some of the more popular ones that I love myself, Pfizer, obviously AbbVie, which is a pharmaceutical company that I absolutely love to have in my portfolio. I think I have that one. I have shares of AbbVie in my Cash App portfolio. Texas Instruments Incorporated, the Coca-Cola company. We all know Coca-Cola. UPS, right? Pepsi, Altria. Listen, they're covering the whole gamut of the companies that you would want. Ford Motor Company, right? Which has recently made a comeback and been on the rise. And if you go down further, you'll see more companies that are within this. Like I said, 103 different companies inside of here. You see Fidelity right there, right? You see Dick's Sporting Goods. I'm just going to name some of the more known ones that you might know off the top of your head. H&R Block, right? And that's just the top 50, right? So they want me to sign up for the, no, you're not going to get me yet. So those are the top 50 holdings that they have. And certainly if you want the entire list there, you can definitely absolutely go and Google it and come up with that. Now, the 3-1 stock split means that at $84.16 per share today, that means at the time of the stock split, which is due to take place, 2 days from now on the 10th of October, that means that by Friday, come this Friday, by the 11th, SCHD, their shares will be somewhere around $28, maybe 27. No, I think it might be lower than that. Yes, I'm tripping. It's definitely, I think it's somewhere around there, right? Now that price is certainly lower than $85 per share. But let me bring it up. So at $84.16, we're going to divide that by 3, and we get $28. That's I was right. $28, a little more than $28 per share is what we're looking at come Friday. Come Friday, SCHD will be at $28 a share, and listen, let me tell you what that does. Let me tell you what that does visually for buyers. That $84 would have turned people off, especially in today's economy when people are trying to rub 2 pennies together to get something else, right? So obviously the cheaper that something is, the more affordable it looks, the more attractive it is for buyers. That's what we want, and that's what you and I want as investors of SCHD. We want this to look more attractive. We want more buyers. Go ahead, because what does that do? It drives the price up for us. Right? It drives the value up for us. Now, you might be wondering, should I purchase now? Should I wait till after the stock split to purchase more shares? Just buy it right now. If you have money to purchase right now, I would pull the trigger today. Because what tends to happen when the stock split happens, typically the value of the shares also increases with it. And you want to already be sitting on the shares that you own when that value starts to drive upwards, right? So for clarity, you are not losing anything in the stock split. Your value will remain the same. However, you will have more shares. That dividend rate will stay the same. It will just be spread out across the cost of a lower share price, right? So we've gone over this just for kicks and giggles. In the last 5 years, this thing is up 56, nearly 60%. Nearly 60%. This stock has performed very, very, very well, okay? Last year, it's still up 20%, okay? And year to date, it's up almost 11%. So it continues to perform regardless of what everyone else thinks. You got to make your decisions for yourself. Last thing we're going to do, we're going to go to dividends. Dividend yield right now is 3.48%, and that continues to increase as well. How do we know that? Let's drop all the way down. You see the chart right here. The dividend chart is right there, and you see a beautiful uptrend. It's a little jagged, however, it's unmistakable that they have increased their dividend since December of 2014. And that's absolutely what you want to see, right? So listen, quick hit video. Just wanted to put this out there. In 2 days, we got a 3-for-1 stock split coming for SCHD. And for people who are looking to get into this, you're wondering whether or not to pull the trigger now or later, just go ahead and do it now, okay? But listen, it's not investing advice. I gotta say that, right? But listen, I hope you all are enjoying your investing journey. I hope you all stay motivated. I hope you stay focused, and I hope you achieve all the goals that you're looking for. Listen, it has been a rough year. It was a rough start for me this year and last year in terms of consistently investing, but I'm back on my game, right? I found a way to get on my grind, get back on my grind, and get back in the game. And that's all it is, all right? We got to find ways to continue to do the things and reach for the goals that we want in order to achieve what it is that we know that we can achieve. And for me, I want that freedom. I want that financial freedom, right? I want to retire early. So listen, hope you enjoyed the video. Hit a like and subscribe for me on the way out the door, and I'll see you in the next one. Later.